Most people watching Bitcoin right now are scared. And honestly, they have every right to be. 4 months ago, Bitcoin was at $126,000, the highest price it had ever traded in its entire history. People were celebrating, calling new targets, talking about $150,000, $200,000. Then it fell apart. Bitcoin crashed to $60,000 in February, a 52% wipeout in a matter of months. That is not a dip. That is devastation. That is the kind of move that makes people quit crypto entirely. And right now, today, Bitcoin is sitting at around $71,000. It has recovered from those February lows, but it is sitting right underneath a wall, a resistance zone that has rejected price multiple times already. And the Fear and Greed Index is sitting at 10 out of 100, deep in the fear zone. That is the situation on the ground. And Raul Pal, former Goldman Sachs executive, macroeconomist, co-founder of Real Vision, and a man who has bet his career, his reputation, and most of his personal wealth on Bitcoin, saw all of this coming. Not the exact numbers, but the shape of it, the structure of it. Buy $10,000 of Bitcoin on a regular exchange. It grows to $60,000. That $50,000 profit? You could owe $10,000 or more in capital gains tax. Now do the same trade inside a Roth IRA with iTrustCapital. That growth? Tax-free. You keep the full $50,000. Same crypto. Completely different outcome. iTrustCapital lets you hold crypto in a self-directed IRA, trade 24/7, and secure your assets with institutional-grade custody. You can also hold gold, silver, and stake certain assets. Real U.S. customer support. $100 bonus when you fund through the link below. In crypto, structure beats timing. Every time. The reason why Bitcoin keeps pulling capital in even when everything around it is falling apart. He said this: Bitcoin is eating the world. It has become a supermassive black hole that is sucking in everything around it and destroying it. This narrative is only going to grow over the next 18 months. You see, gold is breaking down versus Bitcoin, and gold investors will flip to Bitcoin. Not a good trade, not a strong asset, but a black hole. And right now, with Bitcoin sitting at $71,000 and the whole market unsure what comes next, that quote hits different. So the question everyone is asking is simple. Is this over, or is this the dip before something much bigger? Let's get into it. Bitcoin is trading at around $71,000 today, March 26, 2026. It has recovered approximately 19% from its February low of around $60,000. But it still sits roughly 43% below its all-time high of $126,080 set in October 2025. That context matters. This is not a market that is flying. This is a market that got hit hard, bounced off the floor, and is now trying to figure out what to do next. The Fear and Greed Index for the crypto market currently sits in the fear zone at 10 out of 100, reflecting the lingering impact of a hawkish Federal Reserve stance and higher than expected inflation data released last week. And on top of the macro pressure, there has been a geopolitical element to this recent move that most people outside of crypto are not even tracking. Bitcoin's correlation with the Nasdaq has tightened during this period of global tension, with both assets trading as risk proxies. When oil spiked above $112 recently, Bitcoin dropped 8% in 48 hours. Think about that. Bitcoin dropping because of oil prices and geopolitical tensions. That is not the Bitcoin of 2017 that existed in its own world. That is Bitcoin that is now deeply connected to the broader financial system. And that connection, that integration, is exactly what Raul Pal has been predicting for years. Now let's go deeper into what Raul Pal is actually saying. Because the black hole quote is not just a catchy line, there is a specific argument inside it. He is not saying Bitcoin is a good trade this week. He is not giving you a price target for March. He is saying something structural is happening, something that does not care whether Bitcoin is at $71,000 or $60,000 today. He is saying the gravitational pull of Bitcoin is getting stronger, and the assets that used to compete with it for investor attention, gold being the biggest one, are slowly losing the battle. And look at the data right now. Despite year-to-date volatility, institutional inflows into Bitcoin spot ETFs have remained steady, providing a floor for the asset's price. Net inflows from spot Bitcoin ETFs during a recent 3-week period totaled approximately $2.12 billion, with consistent inflows recorded every single trading day. $2.12 billion flowing into Bitcoin. During a period when the price was falling, when geopolitical tensions were spiking, when the macro environment was as hostile as it has been all year, people were not running away from Bitcoin. The institutions were buying the dip. That is the black hole in action. When the price drops and institutions still buy, that is exactly the dynamic Raul Pal is describing. The pull is getting stronger, not weaker. The players with real money are accumulating, not exiting. Gold investors are watching this. Some of them have already moved. Now let's zoom in to what the charts actually show today. Ted, one of the sharpest technical voices on X, broke down Bitcoin's current position very simply. Bitcoin is back into the $71,000 to $72,000 resistance zone. A breakout above this could push Bitcoin towards the $74,000 level, and if Bitcoin breaks below the $70,000 level, expect a sweep of the $66,000 support zone. That is exactly where Bitcoin is sitting as you watch this. $71,000 to $72,000 is not just a number. It is a zone where sellers have shown up before, multiple times. A zone where upward momentum has stalled, and Bitcoin is pushing right up against it again right now. Break above with volume and conviction, and $74,000 is the next target. That would be a meaningful move. That would start to change the narrative from dead cat bounce to real recovery. But lose $70,000, and the next natural support is $66,000. And below that, things get complicated very quickly. Crypto Tony, who has been tracking Bitcoin's short-term moves live on X, laid out the same fork in the road. We test up to $72,000 minimum. From there we reject and drop to new lows, or we reclaim and remain long up to $78,000 to $80,000. Two clear paths, one decision point. And it is happening right now, at this exact price. He also pointed out that he called each of the last 3 major moves live. The pump off the lows from $67,700, the rejection down to $68,900, and now this current push-up. His track record on this specific range has been clean, so when he says this is the moment of truth, that carries weight. Now, before you get too comfortable with the recovery narrative, you need to hear the other side. Because there are serious analysts making a very serious case that this bounce is a trap. B, who goes by 0x Beehive on X, posted this. It's not the right time to be bullish on Bitcoin. Bitcoin breakdown into the lower range incoming. Huge liquidity clusters formed at $62,000 to $67,000. Position accordingly. $62,000 to $67,000. That is a significant move down from where Bitcoin is right now. And the concept he is pointing to, a liquidity cluster, is not something to dismiss lightly. Here is what that means in plain language. A liquidity cluster is a zone on the chart where a massive amount of stop losses and leveraged positions are stacked on top of each other. When the price sweeps through that zone, it triggers all of those stops at once. Prices drop fast, hard, and it shakes out the weak hands before the real move begins. If he is right, Bitcoin has not finished punishing people yet. The zone between $62,000 and $67,000 is still sitting there, waiting to be swept. If the $69,000 to $70,000 support level fails to hold, the next major structural support sits between $61,500 and $64,500. That aligns with exactly what he is flagging. So now you have two interpretations of the same price action. One side says $78,000 to $80,000 is on the table if Bitcoin holds here. The other side says $62,000 to $67,000 is the real destination before any meaningful rally. Both sides have logic. Both sides have chart support. Which side is right? That is where Raul Pal's macro framework becomes more valuable than any chart. Let's go back to Raul Pal. He once said this: "It's an incredible asset. It's the only one with a limited supply with growing demand. It's an extraordinary thing, a call option on the future and the world's most pristine reserve asset." Break that down into its pieces. Limited supply, 21 million Bitcoin. That is it. That is all there will ever be. No government can change that. No central bank can print more of it. No emergency legislation can alter the supply schedule. Bitcoin's fourth halving occurred in April 2024, reducing the block reward from 6.25 to 3.125 Bitcoin per block. That means the flow of new Bitcoin entering the market is now half of what it was before. Supply is tightening at the exact same time that institutional demand is growing. This is not a theory. This is basic economics. If you make something scarcer while more people want it, the price has one direction to go over time. And then there is the reserve asset part of what Raul Pal said. That phrase matters more in 2026 than it ever has. Right now, the US has over $39 trillion in national debt. The dollar is being slowly but consistently diluted. Countries that used to park their excess wealth in US Treasury bonds are starting to ask hard questions about whether that strategy still makes sense. Bitcoin answers that question in a way nothing else can. It is the only asset on Earth that no government controls. No central bank can inflate it. No country can sanction it out of existence. It runs 24 hours a day, 7 days a week, on a decentralized network that has never gone down. When Raul Pal calls it the world's most pristine reserve asset, he is making an argument that traditional economists are still uncomfortable saying publicly. But more of them are starting to think it privately, and the market is confirming it in real time. The SEC has a deadline approaching on March 27, 2026, to decide on 91 concurrent crypto asset ETF applications. That is one of the largest waves of crypto product approvals in history. If even a fraction of those get approved, you are looking at a new category of institutional products flooding the market. New access points, new buyers, new demand flowing into a supply that is fixed and shrinking. That is the call option Raul Pal is talking about. He is not betting on what Bitcoin does in the next 2 weeks. He is betting on what happens when the world runs out of better options. And his third quote makes his position unmistakably clear. If I could only own one asset for the next 10 years, it would be Bitcoin. It encapsulates all of my larger macro views. Yes, like gold too and many other things. But Bitcoin risk/reward beats all. One asset. 10 years. Bitcoin. This is a man who has spent his professional life analyzing every major asset class on Earth. Stocks, bonds, commodities, currencies, private equity, real estate. And after running those comparisons at the highest level, with decades of experience and a macro framework that most people in this space cannot match, his conclusion is that Bitcoin beats them all over a decade, not because it does not fall, not because it does not have violent drawdowns like the one we are sitting inside right now. Because when you account for the supply structure, the demand trajectory, the macro tailwinds, and the technological adoption curve, the risk to reward on a 10-year Bitcoin position beats everything else available. And look at who agrees with him in the institutional space. Several major brokerage firms have maintained bullish long-term outlooks on Bitcoin. Analysts from Bernstein recently reaffirmed a year-end target of $150,000, citing the strength of long-term holders and the continued accumulation of the asset by corporate treasuries. $150,000 by the end of 2026. From where Bitcoin is trading right now at $71,000, that would be more than double from current prices. Here is the piece of the puzzle that ties everything together. Historically, Bitcoin has reached its cycle peak 12 to 18 months after each halving. Bitcoin's fourth halving occurred in April 2024. That places the theoretical window for the cycle peak between April and October 2026. We are in March 2026 right now. That window has not closed. We are sitting right inside it. If the historical pattern holds, the most explosive phase of this cycle could still be ahead. The crash from $126,000 to $60,000 would not be the end of the bull market. It would be the most painful shakeout inside it. The people who got washed out at $60,000 in February may have sold at the worst possible moment. And the people buying at $71,000 right now, if the halving timeline plays out as it has in previous cycles, may look very smart 6 months from now. Now, none of this is a guarantee. History rhymes, but it does not always repeat with perfect precision. Every cycle has its own macro environment. The geopolitical tensions, the Fed's reluctance to cut rates, the ongoing tariff pressures between the US and its trading partners, these are all real headwinds that did not exist in previous cycles in the same combination. but the underlying math does not care about any of that. 21 million Bitcoin, fixed, forever. Demand growing from institutions, nation-states, and ETF products. The supply shock from the halving now working its way through the system. Those three forces do not turn off because of macro turbulence or fear index readings. There are two groups of people watching Bitcoin at $71,000 today. The first group is watching the hourly candle. They want to know if $72,000 breaks or holds. They are ready to move fast. They have their stop losses set. For them, the next 48 hours is everything. The second group is watching the decade. They are not particularly stressed about whether Bitcoin tests $66,000 before it goes to $150,000. They bought an asset with a hard supply cap during a period of increasing global demand. The short-term noise does not change the long-term thesis. Raul Pal is in the second group. And the institutions pouring over $2 billion into Bitcoin ETFs during a period of falling prices are also in the second group. The black hole does not notice the short-term turbulence, it just keeps pulling. Here is where this video has to be straight with you. The bear case is real. 0x Beehive may be right. The $62,000 to $67,000 liquidity cluster may get swept before any real push higher. If the Fed comes out hawkish again, if global tensions escalate further, if that $70,000 support level breaks cleanly, the downside move could be fast and painful. The levels are clear. $72,000 is the immediate ceiling, $70,000 is the floor of the current range, and $66,000 is the deeper support that Ted identified. If Bitcoin loses $70,000 and does not reclaim it quickly, you need to be prepared for another leg down. But here is what the data also shows. Bitcoin held above the psychologically important $70,000 level for 3 consecutive days this week, signaling renewed buying interest after weeks of selling pressure driven by macro and geopolitical forces. 3 days. Holding above $70,000. With the fear and greed index in the fear zone. With global tension still present. With a hawkish Fed in the background. And yet buyers kept showing up. That is not what a dead market looks like. Raul Pal called Bitcoin a black hole. He said it is the only asset with a limited supply and growing demand. He said if he could only hold one asset for the next 10 years, it would be Bitcoin. And right now, with Bitcoin sitting at $71,000, sitting in a fear zone, sitting beneath resistance while macro headwinds create one of the most uncertain short-term environments in recent memory, the institutions are still buying. The ETF inflows are still positive, the halving timeline has not expired, and the 21 million cap has not changed. The black hole does not care about your sentiment indicator, it just keeps pulling capital in from everything around it. The short-term decision is yours. Watch $72,000. Watch $70,000. Know your levels. But the long-term argument Raul Pal has been making since he walked away from traditional finance and put his money where his mouth is. The chart right now is not disproving it. If anything, it is setting it up. So the big question today is this. Do you think Bitcoin holds $70,000 and pushes to $78,000 from here? Or does it need one more flush to the $62,000 to $67,000 zone before the real move starts? Drop your honest take in the comments. Thanks for watching. Please don't forget to like and subscribe. See you in the next one.